is in full-blown panic mode, and that's great for everyone. But before I get to that, gamers need to check their GPUs. I told you it was coming, and Nvidia's about to launch their first real consumer CPUs.
You know, for years, Nvidia felt untouchable. Gamers, AI researchers, and data centers all relied on their GPUs. Jensen Huang built a near monopoly, and for a long time, it seemed unstoppable. Their cards powered everything from high-end gaming rigs to massive AI supercomputers. Investors loved it. Revenue was soaring, and Nvidia's stock grew over 1,000% in the last 5 years. Huang became the face of the AI revolution. People treated him like a genius who could do no wrong. But here's the thing. Things are changing. And if you're an investor or someone keeping an eye on the tech space, you need to pay attention. Nvidia's golden era was built on scarcity, brand loyalty, and high prices. Their GPUs weren't just products, they were statements. Everyone wanted the latest, fastest, most reliable card. That allowed Nvidia to charge premium prices, and investors cheered. But cracks are starting to appear. This isn't minor competition, this is serious pressure from every angle. AI is where Nvidia hit the big leagues. Their GPUs power everything from ChatGPT-style models to autonomous vehicle research, high-frequency financial modeling, and massive scientific simulations. Investors bought the narrative. Nvidia isn't just a gaming company, it's the backbone of AI. Profits skyrocketed, stock prices soared. But the story isn't perfect anymore. AMD's new MI300 series now competes directly in AI compute power, sometimes offering 20 to 30% better performance per dollar. Intel's Ponte Vecchio and other upcoming chips promise comparable speed and energy efficiency at lower costs. Open-source frameworks are increasingly optimized for non-NVIDIA hardware. Labs are experimenting with multi-vendor setups, mixing AMD, Intel, and specialized chips to save money and boost performance. The era of NVIDIA only is fading. Their AI dominance, once unshakable, is being challenged. And every lost contract, every multi-vendor setup, is money NVIDIA won't earn. Investors need to notice this, because the narrative of untouchable NVIDIA is under threat. Gaming, which fueled NVIDIA's early dominance, isn't the cash cow it used to be. GPU prices have stabilized after the shortage years. Used and last-generation cards flood the second-hand market. Cloud gaming platforms from GeForce Now to Xbox Cloud Gaming reduce the need for expensive desktop GPUs. Even hardcore gamers are looking elsewhere. AMD Radeon now offers comparable performance at 10 to 15% lower prices. And rising energy costs make high-end cards less attractive. NVIDIA's gaming edge, which financed their AI expansion, is shrinking. That's a big deal for anyone tracking margins and revenue growth. The supply chain is another pressure point. NVIDIA relied on tight control of chip production, but TSMC and Samsung now supply AMD and Intel as well. China and other regions are heavily investing in domestic GPU production. Cloud providers like Google, Microsoft, and Amazon are experimenting with in-house chips to reduce reliance on off-the-shelf NVIDIA GPUs. That's a monopoly under pressure, and monopolies under pressure don't last forever. Even AI itself, NVIDIA's crown jewel, exposes weaknesses. Large AI models now run on AMD or custom accelerators. OpenAI, Google DeepMind, and other labs are experimenting with multi-vendor setups to avoid vendor lock-in. Startups and universities, often under tight budgets, are choosing cheaper alternatives. NVIDIA's monopoly wasn't just about selling hardware, it was about control over the AI ecosystem. Owning the fastest, most reliable GPUs allowed them to influence which tools researchers used, and even which AI frameworks became standard. That control is slipping. Stock volatility is another story investors shouldn't ignore. NVIDIA stock was considered recession-proof for years. Slowing GPU sales in gaming and enterprise, combined with aggressive competition, are eroding revenue growth. Regulatory scrutiny over monopoly practices has emerged in multiple markets. Investors are asking, how long can NVIDIA charge premium prices before competitors catch up? Every misstep could trigger sharp stock swings, and in a competitive market, there are no safety nets. Jensen Huang built Nvidia into a powerhouse, navigating multiple technological shifts. But now, the threat comes from all directions: gaming, AI, cloud, and even national GPU programs. Brand loyalty and early dominance in AI are no longer guarantees. Nvidia must innovate faster than ever, releasing GPUs that aren't just incrementally better but revolutionary in performance, efficiency, and price. Prices may need adjusting to stay competitive. Partnerships and collaborations must expand to keep Nvidia GPUs as the default choice for AI training and cloud workloads. Fail here, and competitors like AMD, Intel, or emerging startups could chip away at Nvidia's empire faster than anyone imagined. Here's the reality: monopolies never last forever. Nvidia's golden era of uncontested GPU dominance is under threat. Gamers, AI researchers, and cloud providers now have alternatives. Supply chains are diversifying. Multi-vendor AI setups are becoming the standard. Market saturation is creating real pressure that Nvidia cannot ignore. Jensen Huang built an empire, but the clock is ticking. Every chip, every sale, every partnership matters. The stakes have never been higher, and unless Nvidia adapts, even the most loyal customers may start exploring alternatives. For investors, this is critical. Nvidia's dominance is no longer guaranteed. Every choice today, how aggressively they innovate, where they invest in production, how they maintain ecosystem dominance, will determine if they remain the king of GPUs or just another player in a crowded market. Cloud computing, AI, and gaming were once playgrounds Nvidia owned. Now, competitors are catching up. Supply chains are shifting. Customers have choices. The golden age of Nvidia dominance is showing fatigue, and it's not a question of if, but how quickly that monopoly will crack. This isn't speculation. Every new competitor chip, every in-house custom silicon experiment, every shift in AI framework adoption chips away at Nvidia's market control. Investors, gamers, researchers, pay attention. Nvidia doesn't just sell GPUs, they sold dominance, control, and influence over the AI ecosystem. That influence is slipping. The AI empire they built could survive, but only if Jensen Huang and his team act faster, smarter, and more aggressively than ever before. Otherwise, they risk watching the empire crumble in front of their eyes. And one last point for investors: every lost contract, every multi-vendor experiment, and every supply chain shift is not just a tech story, it's a real revenue and stock story. If you hold Nvidia stock, this is the moment to pay attention. 2026 could be the year when the narrative finally changes, and the empire that seemed eternal starts to show cracks. Every chip, every partnership, every decision matters. Nvidia is under pressure like never before, and the future is anything but certain.